Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings to everybody, guys. Today we will take a look at the two setups that we have. The first is in Japanese yen. We have discussed yesterday, and here we have some changes with it. And also on the Great British Pound setup that we haven't discussed within the current week, but still it's working since it's based on the longer term perspective. And mostly on Great British Pound, we are waiting for a point where we could take the position, long position. But two of these setups stands a bit contradictory. So on the Japanese yen, as you can see, market right now stands and showing the breakout of this triangle that we have specified yesterday. And this is of course not a good sign for the bears. But still, the 114.50 probably 114.40 area. This stop has not been taken yet. That's why this butterfly is still valid, and the grabber that we have on the weekly chart is still valid. And it's obvious that the solution, the final result will depend on the non-farm payrolls data that we will get today. So that's why we will keep watching on the setup till the final moment. So today probably it will be either destroyed, the all bearish setup that we have in the Japanese yen, or it starts to work, and the starting point could become really fast. On the 4-hour time frame chart, yesterday, guys, on the 4-hour time frame chart, we have the same channel that has not been broken yet. The downside market stands inside of it. Here is the validation point of the whole bearish scenario. It's almost the same. But very mostly interesting what we see on the hourly chart. Yesterday, guys, we have traded the entry with the potential head and shoulders pattern that we have discussed yesterday, and even I have was in time to prepare the very short term live trading video where I showing how I taking the position here. So, but as you can see, the hand shoulders pattern hasn't worked and it has failed. So that's why actually I got just a very shy result on this trade. Second half of my trade has been stopped out on the break-even point here in the night, so it's rally up. As the hand shoulders hasn't worked, the last pattern that we could get here, this last bearish reversal pattern, this of course three drive sell pattern. You can see this could become first drive, second that stands at 127 on the first, and the third drive that stands at the crossing on 127 on the second, and 1618 of the first. So this is the last bearish pattern that could be formed here. The market just stands a few steps from completion of this. Also, this pattern takes the shape of the, as you can see, side-by-side butterflies. This very often happens when a three drive or some wedge is forming. So what we could do here you could act differently, guys. So if you want, you could trade, and if you're familiar and like to trade the important release data and non-farm payrolls release, you could trade right at this point. It's completion of the free drive, taking the position with downward acceleration. Because downward acceleration will mean the poor non-farm payrolls data or some poor data in the component of the non-farm payrolls. Maybe the wages will be wages inflation will be smaller. Maybe some other components will be weaker. So here we need to strengthen in the Japanese yen to trigger this downward action, right? But yesterday we've got the positive ADP report. It was better than expected, and from that standpoint, here is a real tricky moment to trade. At the same time, if you'll take a look at the daily chart and the weekly chart, if somehow will happen that we will be wrong and market indeed will start down, you can see here we have the very potential of this trade. That's why in the current situation, in my opinion, it will be safer to not trying to catch the top right here, but wait the release, and if it will be supported and the market will start to move down, trying to take the position in some minor retracement with this free drive pattern. Something that we have done yesterday on this 5-minute chart when we trade the entry at the top of the right shoulder, right here. Because currently the risk overcome the necessity, so it's not necessary trying to catch entry point right here because you have very strong, very significant downside potential, and you will be able to take the position safer at any point on the way down. Because here is really great chance, guys, to get the failure of the whole bearish setup. Another reason why I'm talking about it is because take a look at the Great British Pound setup that we have talked about. In the 4-hour time frame chart, we have the top starting move down, so we should get some kind of the ABCD pattern, I suppose, right to the target in an area that we have specified in the weekly research, 128.60 area. It's an area where we will be watching for the taking long position. Here, guys, as you can see, I even placed the alert for this level. It means that if Great British Pound will drop, then the Japanese yen should, the chart, Japanese yen should rise, right? Because this will be the relation to the United States dollar. United States dollar will rise. This will be section. That's why you can see that we have the embedded contradictory patterns on the British Pound that suggests downward continuation, and on the Japanese yen. Of course, some of these patterns will fail probably, but when you see the contradiction patterns on the different currencies, it always better to wait for clarity. So get the numbers and then make the decision. Speaking on the Great British Pound, the particular pattern that we'll be watching for is got the triple-two buy. So if we take a look at the hourly chart, we have the front stop, ABCD retracement. It's approximately 786 deep FIB support. It's very typical for a triple-two buy patterns. Something that we've got yesterday on the Japanese yen, but it was in an opposite direction. So the triple-two sell. And here we have the triple-two buy. That's why. That's the reason, guys, why I'm calling mostly to wait for data release and then make an action, because it's really very big risk that the yen could fail the overall bearish setup. So that's what I would like to talk about today. Great British Pound and Japanese yen. Also, guys, Reuters poll now suggests numbers around 179,000 of the non-farm payrolls. So let's wait for a data release and see what will happen.